Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, April 22nd. Okay, it's 6:40 as I'm starting the video. Taking a quick look at futures, and although the numbers are red, we're basically flatlining here. Excuse me, flatlining here this morning. Not a ton going on the economic calendar today. Of course, we've got jobless claims at 8:30, and if you'll recall, last week was a nice beat. Maybe we'll see follow through on that this morning. We've got the Chicago Fed and Kansas City Fed both coming out with their regional economic indexes. We've got nat gas inventory at 10:30, existing home sales, and then there's a 5-year TIPS auction at 1 p.m. that might be interesting as far as looking at forward inflation expectations, etc. So not a ton of earth-shattering information on the board, but a couple of them there. Chicago Fed and jobless claims might be interesting to take a look at. Might move the market a little bit. Jobless claims especially. So let's dive into the markets. Yesterday was an interesting day. I can't remember. I didn't go back to look, but just in my recent memory, when we had all three of the indexes going up together. And that's why I entitled this morning's note synchronization, because in the past, or at least in recent memory, if IWM was rocketing higher, or moving higher, I should say, the Qs would be soggy, and then if the Qs were going higher, IWM was soggy. So yesterday was really the first day I can remember in a long time when all three advanced. So maybe that portends something in the future, or maybe it's just a one day wonder. We'll have to wait and see. But let's look at the technicals here and see if we can get some key levels to work off of today. SPY 2-hour. And one thing I've done today is kind of add some locations and color for you traders out there to think about as you're doing your own charting, or when you're looking at my charts, on how to position yourselves on these active trades. So let's take a look at it. SPY 2-hour. We had made a new high, and then we came back and filled this gap. And yesterday, we found a base here at the bottom of the gap and moved higher. Now, it's interesting to note, we always talk about the tops and the bottoms of gaps as being important. And you can see here that I had the bottom of the gap marked at 41.55. And you can see we had the big red bar go down and probe that level, hit it, and then go a little bit beyond. That's normal, momentum selling overshoot. And then, remember, these are 2-hour candles. So we had 6 hours of market trading where the sellers could not push it down any further. So if you were on this time frame, you could say to yourself, okay, we had one nasty bar, and then we stabilized. What if I got long against the low, which was right here at about, let's say, 410.50. So you had 50 cents of risk, right? And potentially get a bounce. And with any of this, it's risk versus reward. So yes, we could have had another selling bar yesterday morning, and all you can say there is I got stopped out, right? But after having had 4 to 6 hours hugging the bottom of the gap, that's a good risk to take, because we know that bottoms of gaps are support by definition, right? So that would have been a nice line to shoot against. Your second buying opportunity is taking out the top of the gap, right? So those are well-defined levels that you can use in your trading. So okay, today we're back up near the highs. 416 is your pivot. If we take out 416, we're going to make a new high, right? Because we're only, $1 away. I would expect if we took out 416 that we'd push up here, 418, 419, whatever, and at least make a marginal new high. Oh, I did it again. I clicked close out on the tab. Let's look here. Here's the 30-minute chart of SPY. And here I colored in as this support zone right here. And this is where we talked about those candles. And yesterday morning, we had actually already had 410.50 marked as a line of support going back here. And we got that first opening candle go down and touch 410.50 and revalidate this low. See the wick down a couple days ago right here to 410.50, and then we went up and reclaimed this level here at 411.60 or whatever it was, and then we took out the downtrend line. So a couple locations where you could have bought was at 410.50. That might have been a scary buy. Let's say you didn't take that. You had a follow-up candle here to reclaim this level and jump back above this resistance line. Okay, you didn't take it. You had a downtrend line. Once you took out the downtrend line, that would have been another place to buy. And then you had one last chance on this reach back to this level here, which I believe corresponds to, that gap level again. I took out the gaps because they were filled. And then you got this igniting bar. And then here at 413.80 or whatever, once that level was taken out, that was another opportunity to either buy or add to your position. And then even there, you got $2 of upside. So there were a number of places to buy. And also, in your trading psychology, never give up. Never give up. Always look ahead to the next opportunity that, you could have been, because everything's in hindsight, right? You look back, oh, I could have bought here, I could have bought here. Darn it. If you're looking ahead, where's my next opportunity? Where's the next decision point? And on this chart, it was right here. Once you took that out and you reclaimed that level, then that was the line to shoot against. And even at that point, you got $2 of upside, which was, would have been a great trade. Moving on to the Qs. Again, gaps are important to watch. We had the down move We almost reached the top of the gap. We fell shy by a couple ticks. And then yesterday, we went down and touched it. So buying at that top of the gap support would have been objective. And then you had another chance to buy here at 337. So today, let's look at the 30-minute chart. We're right here at 339. 339 is your pivot. Above, you can look for 342. And if for some reason we stagnate or pull back, you could come all the way back here to 335. And again, I have highlighted on the charts zones of support right here. Look at all the candles on 335, hovering, hovering, hovering. One touch, the shakeout move, one touch to the top of the gap and then off to the races. Downtrend line taken out and then up. Over here, we had a zone of resistance where we spent, I don't know, a day and a half not being able to take out 342. And so there, not saying you necessarily had to be short, but take it in conjunction with this uptrend line, a big area of resistance coupled with a trend line break, that's your sell signal, right? So then you work down the other way. So it's easy in hindsight, I know, but if you identify these zones, you can kind of get, probabilities working in your favor. And if you're wrong, that's what stops are for. IWM 2-hour. IWM had been in this choppy triangle consolidation. We had a fake breakout here. And the rejection at 226 came down, and we had this uptrend line already pre-identified, and we found support there and moved up, and again broke out from this triangle zone. So now I think it's pretty clear today that 223 is your pivot point. Above 223, I can see us getting back up here towards 225, 226. And if for some reason we get rejected, coming on back to 220. And here it is on the exploded view down to the 30-minute chart. And again here, big zone of resistance, right? We came up, fake breakout, came back down, tried it again, no dice, tried it again, third time, then it really let go, and then it came back down here where if you weren't short from up here at 225 on the break of this level at 223, that would have definitely been a short entry because you had this big zone of support here that broke, and then you went down to the next level, little kickback rally to trend, and then let go again. But again, here down at the bottom, quite a number of reactions off of this 215.50 where you could have said to yourself, sharp downtrend, but looks like it's stabilized. And let's say you took the other side of the coin saying, look, it's going to break down because of this downtrend. If your stop is just above, then on these bounce candles, you would have been, taken out of your stops. Now, yesterday, it's pretty tricky. We opened up, here, and then there was a quick reach back candle right to 215.50, and then it took off. But again, let's look at it from the mindset of looking ahead to the next opportunity. You know, damn it, I was short and I got stopped out. Now we got this big igniting candle. Damn it, I missed the entry for long. You know, I guess my day's over. Well, you had a level here at 219, which was pre-identified. You recaptured. That's a buy point. We had another level here at 220.50. That was a buy point. Another level reclaimed. You had the downtrend line, which was reclaimed. So all along the way, you could have been saying to yourself, possible rejection point at 219, or, long above, short below. Broke out, that's a buy. Breakout, even if you said, wow, the trend line's too close, I don't want to get long right here just below the trend line, because then, you could hit that and then get rejected, just like it was here. But once the trend line was taken out, let's say at 221, you still got $1.50 of upside here. So like I said, today, 223. If you take out 223, I think it finds 225. That would be your upside target. If you appreciate the levels and that kind of analysis, if you're new here, I really appreciate you spending some time. Hit the subscribe button and the alarm bell. That way you won't miss any of my content. And also look over in the show notes where you can subscribe to all my content and get everything in a nice, neat email whenever I send anything out during the day or after hours or on the weekend. That way you won't have to, search all over the place looking to see if I made a Twitter post or on StockTwits or anything like that. You'll get it right in your email box, which will be great. And you'll also get an invite to our trading room. Longtime listeners, I really appreciate you sticking with me. Please pass the link along to somebody in your trading group. Help me get my message out and help build the channel. I really appreciate that. So, moving on to FATMAAN, which was, for the most part, dormant yesterday. I mean, we were up 1%. Here we are on Facebook, red on the day. We've got this existing downtrend line, which I think, for me, we lost the prior high. We had this breakout, and then we lost 310, came back to recheck it, and then we lost that and came down to 298, and now we're putting in a little bounce. For me, I'm going to give up this, whatever it is, $2 from the break. Let's say it breaks out today and takes out this downtrend line. Normally you'd say, okay, that's a breakout. But since we're below the prior high, I want to see that prior high reclaimed. So on a break above 305, for me, that would be a place to get long. Again, recovering a prior high, 305, that would be a buy signal. And look for 310. And then above 310, I'd be looking for new highs, 313, 314. On the downside, you don't want to see 298 get broken, because that would indicate, the downtrend is still in place. And, once you get below 298, you could fall all the way down to 290. Where I have this next, you have this next big volume over price support bar. So, if you did get long right here, I think, 298 has to be your line in the sand. Apple, soggy yesterday, 0.3%. I drew in a little support zone here at 131.50. We had this reach down candle aligning with this low over here and these lows. We reclaimed 133, which is positive, but I think today you gotta clear 134 before you can really do much. And then the prior highs at 135 would be your target, and then ultimately 137 would be a big level. And if you go back to the daily chart, you'll see the importance of that 137. That's a big level to clear, and if it did, could really be an important location to get long for a more of a duration trade. Tesla. These levels really worked out yesterday. We had talked about this impulsive breakout here, which went right up to this 780, 785 level where it filled the gap to the penny, which I've since removed. Put in a 50% halfback down to 725, came up to 750, got rejected. And we talked about, if it lost 725, it's going to come into this zone here, resistance, 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 resistance here, and then support at 710, 707.50, right in that area. Came up, tested it again, had a red to green at 710. If you were aggressive, you could have bought it there. But then also on the reclaim of 725, you could have bought it there as well. So that was a couple of nice entry points on Tesla. Now today, you take out 750, 780, the prior high, comes back into focus. So key off is 750 today. And if Tesla puts in a strong day and takes that out, I think we go up here to 780. Of course, anything below 750, and it could come back and, back test 725. So I wouldn't front run it. I would, wait till that level's taken out and then hit it there. Notice here on PPO momentum, we're starting to get that bull cross and move back above zero line, which would be bullish. So key off of 750 today. Microsoft, again, showing the importance of the top of the gap, came down, tested it, let's see, 5 bars, 6 bars, reached back candle yesterday morning to the top of the gap, and then went higher. And your buy point, if you didn't buy the top of the gap, you could have bought the reclaim here of 259. So right now, the prior high, I don't have it marked in here, but let's just call it 261. You take out 261, going to all-time highs. All-time highs you got to buy. Then you can move up your stops and your strikes to 261 and stay long against that level. Again, here you've got a PPO bull cross in the works, and you've also got RSI beginning to break out from this long downtrend resistance line. You break out of RSI, you put in this bull cross, and you break out to new highs above 261. That's your triple green light to go on Microsoft. Amazon, Free 50 Club delivered again. That first opening candle, we opened up at, what do I got here? Is that right? Yeah, we opened up right here, like 33. What did we open up at? 33.16 is where we opened, I guess down here. And then we reached down to 3,300. So that was a support level. 3,300, long against 3,300. you got the move back up to 33.50. That's your free 50 club. And then you got your breakout here above 33.50. So today, as long as it holds 33.50, you got 3,400 in the crosshairs on the upside. If you lose 33.50, I would be out of your longs. Doesn't mean you got to go short, but 33.50 is definitely your pivot. And again, these $50 increments continue to work like a champ. And I mean, if you go back in time, I mean, look at all the levels where the free 50 club delivered the goods. I mean, it's been remarkable, really. And if you've been trading it, kudos to you. Continue to use it as your levels as long as it continues to work. Google had that reach back candle. Oops. Here we go. Had the reach back candle down towards 2240, and then you got a nice push. If you didn't buy down in here on the reclaim of 2270, that was your buy point. Now we're above this resistance level, which now becomes support. Stay long against 2270, and you're looking for the prior highs up near 2300. I would stay long against 2270. Look for the prior high, and if you get it, if you get a breakout above 2300, then you can, rotate up all your stops and strikes to the prior high. And, if you're of the mindset, price has got to prove it first, you can sit tight, bide your time, and wait for the breakout above 2300. And then you can take your long position there. Because I think once you get above, once you break out to all-time highs, then I think 3,400 is in the crosshairs. That was a measured move that we calculated way back here. So I think 2,400 is a definite and realistic possibility. Netflix had the bad earnings result, which has set up a bracket trade for those that are interested. We've got a big gap above from 515 all the way up to 550. So what's that? $35. And on the low side, we've got 503. But I want to, in the normal bracket trade scenario, is you sit tight until price tells you which way to go. So for instance, if today we were to break out above 515.46, you get long against that level and you play for a gap fill higher. If price comes down and takes out 503.60, then you're playing for downside down to the bottom of the box here at 470. But I want to offer a different idea for longer term swing traders. We've got the 200 here, and we've also got a zone of support right here at, let's call it 495. Let's say you're of the opinion, okay, bad result on earnings, but we didn't lose the 200, which is rising, and we didn't lose this zone of support here at 495. I'm going to get long against the 200, and that will be my stop. So if we're at, call it 509, and the 200 as it is at, let's call it 503, you got $6 of downside, and at a minimum, a $35 gap fill. And realistically, if it fills the gap, you're going to go up and touch the top of the box at 560. So there's another $10 to $15 to the top of the box. You could take that approach and say, you know what? The 200 is close enough. That's been support the whole time. I'm going to take a shot right here, right now, and shoot against that line. And if you lose 503 on a daily closing basis, you're out. So that's an idea on Netflix. Running short on time here. We're at the 30-minute mark, so I want to quickly go through these. SMH found support at the breakout level and went higher. A buy point there on reclaim of the bottom of the box, or bottom of the gap. And now we're back up at resistance above 249. Then your downtrend resistance is your objective. And if you break out above 250, 150, then you're going to go back up to the highs. XOP broke down, but then had a nice recovery candle. If you got short, you got to shoot against this 76 level, and if that takes you out, you were probably going to be stopped out. Commodities, and I'm going to do a whole thing on commodities and send it your way, but I just wanted to point out a couple things here. This is cane weekly, so that's sugar. And my point of these charts, just these couple of charts on commodities, is to say you haven't missed anything. And also keep in mind the uncorrelated nature of commodities. They don't have earnings. They don't care about the S&P. They don't care about Facebook and Apple. They do their own thing. So here's sugar. And this chart goes back to 2014. As recently as, call it 2017, cane was up here at 15 bucks. We're at 8 right now. This is just a base, right? This is just a base. You break out at 8 into this void, you're going to 925. You break out from 925, you're going to 12. That's just the way it works. The principles of TA are exactly the same. You reclaim that level, you shoot against it, and you go for the next line of resistance. So, really critical spot on sugar. And if you're going to get involved in these commodities, unless you're, Joe Trader, buy some time. Go out to September. Go out to October. Go out to January and say, I'm going to shoot against 8 if we break out. Then if you take out 925, you can simply raise your stops. You don't have to, establish a whole new position. Because once you get long, you can just raise your stops all the way up. Corn. Oh my God, look at how far corn has run. It's gone from 12 to 20. All right. Back in 2012, it was 52. Right? 10-year bear market. Well, now we're back up to this critical level here. And I've put on the fib retracements. What if you say, okay, we're still in we haven't taken out any highs, is this a bear market rally, or is this the beginning of a bull run? Doesn't matter. If you take out 20, your next objective is the 38% retracement level here at 27. And if you get a half back, you're at 32. And if this is a bull market, 10-year bear run followed by a 5-year bull run, you could be back up in here into into the 40s and 50s. So cycles change is my point. And don't think that, oh my God, I missed the whole thing and, not get involved. Let's pick our spots. And, you cross 20, you've got a very objective line to shoot against. DBB is the ETF for base metals, lead, tin, aluminum, all that stuff, industrial metals. We just broke out to a 7-year high. And you can see here that this was a trade idea. I don't know exactly when it was sent out. Probably sent out when we took out this 16 level, but that's besides the point. We just had a big breakout. You could easily shoot against 19. And we had a little pullback here. We had a consolidation flag here. I think it's going higher. And if this inflation trade continues to work, 19 would be a great level to shoot against. And like I said, on the other commodities, go out in time. This isn't something that you buy for, May 1st that expires in 2 weeks. Go out in time, let it just grind away. Okay, let's wrap it up here. A little longer video. I hope you appreciated the extra content and look forward to a more detailed video on some other commodities that are on my radar. Hope you have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.